All right, welcome to another episode of Investing with Quito. I have my co-host here, Jeremy, and
Hey,
today we have a special guest, Taylor Honecker, the expert in the insurance industry. Taylor, how are you today?
I'm doing good. How are you, Keto and Jeremy?
They're
Good to
doing
see you guys.
well.
we're
Yeah,
good. Yeah.
thanks for coming on. I mean, I know we've been scheduling this, so to finally get you on our little show here, it's great.
Yeah, thanks so much for having me. This is awesome.
Yeah, awesome. Well, let's kind of jump into it. So, and kind of give us a little bit of your background because I know you do insurance, but how did you get into insurance? What drew you into it? And then Jeremy and I will kind of ask you insurance related questions.
Yeah, sure. So I guess long story short, my dad owned an insurance agency for 40 years in Billings. My mom was a realtor for 20 years. So kind of grew up around the industry. And then naturally, of course, I decided to go a different route. So I actually went into the energy sector. So did that for about a decade, and then started having babies, and of course wanted to be closer to family. So left the oil rigs, the fun plains of North Dakota to explore insurance. So yeah, my dad actually found the opportunity, and he said if I were to do insurance all over again, knowing what I know now, this is exactly how I would do it. So it sounded like a great opportunity. And now that I've been doing it for about 3 years, really, I'm kind of made for this. It's in my blood. So my only regret is just not doing it sooner.
Hmm. Yeah, it's kind of nice to have because your dad's been in it and you have someone that can guide you through, right?
Yeah.
Because I know like building a business from scratch is not easy, right?
Right.
And then to have, your dad that's been doing it, for decades, be the one that guides you through. So that's awesome.
Absolutely. Yeah. His knowledge is it's very valuable. Although I will
Taylor,
say
did you
some of it's obsolete. But
Taylor, did you start a brand new agency or did you acquire an existing one?
I started brand new. Yep,
Okay.
started my own right out of the gate. So yep, just decided to go for it. But
And what is your insurance agency called?
so my insurance agency is called Honecker Agency. That's my last name. Goosehead Insurance. So I bought into a franchise. Essentially, it's similar to like State Farm and Allstate. It's an insurance aggregator called Goosehead Insurance. So we're the largest, fastest growing insurance aggregator in the U.S. And what an aggregator is basically I'm an independent agent, and what we do is I'm appointed with over 35 different carriers. So we basically pool together a bunch of carriers, and then we can shop all 35 of those carriers and then get the best rates. So it's works really well.
Yeah, we're finding that really helpful for us right now. We're working together to try to get our business insured. And
Yeah,
I'm sure as you're finding out as we did, it's a tough one to insure
yeah.
and to get a good cost.
It is, but it helps to have some options and to be able to be flexible. So yeah,
It
that
really
definitely
does.
helps. Cool.
Yeah. Now, speaking of insurance, because I know I met you through Jamie,
Hmm.
who referred you to me because I was looking for insurance on my properties, right? So, um, when specifically when it comes to just say insurance in general, what should people be looking for? Like, just say for a car insurance, let's say,
Hmm.
what do people need to look out for, and what kind of coverage do they need?
Well, that's a great question. It's going to be specific. Every house or every risk, as we like to call it, is unique. So really, just it depends on what the client is looking for, whether or not they're just a first-time home buyer, whether or not they're like, a landlord buying investment properties. So it really depends. In your case, Keto, you're buying, investment properties. So you're going to have a mostly what's called a dwelling place policy versus a homeowner's insurance policy. So it's a little bit different the way that they assess the risk. But as far as what to look out for, I would say really just shop. Honestly, try to get a couple of different quotes or find a broker that is that's going to go and get a couple different quotes for you. Because if you're not seeing the whole market, especially right now, then you don't know what you're missing. So you need to be able to compare quotes from different agents that can give you a good depiction of what's actually going on in the market, because there's been a lot of sticker shock going on right now, just because this is probably the hardest insurance market ever. I've talked to people that have been in the business for 30 years and they're like, man, I'm really sorry you're getting into insurance right now. This is like the worst time ever to be getting into it. And I'm like, well, it could be the worst time or the best time to be getting into it, because a lot of these guys are getting out of it. But yeah, just really shop around. Try to get the best rates you can. And the best way to do that is just shop around. That'd be my suggestion.
Yeah, because I know like different insurance, come like the quotes, because obviously, you got to make sure that you're getting the right kind of coverage, right? And when you're shopping, you want to make sure that those coverage are similar, if not better, right? And in terms of the coverage, is it typical for the insurance whoever you get the quote for, to actually send you a printout so you can actually take that printout and say, okay, this is what I have. Here's, what kind of rates are, for the same similar coverage.
Yeah, you're gonna want to at least look at like apples to apples. So I always compare apples to apples first and foremost. That way I can just show you, hey, I'm competitive. But then what I try to do is also sell you some oranges, comparing apples to oranges, because you want an insurance agent that's going to be there for you when you need them. One of the biggest complaints that I've heard from clients moving over from, an insurance agent that they've been with for 30 years is, hey, I call them, it's been weeks, now it's been a month, haven't heard back from them. And plain and simple, insurance, the name of the game is renewals, right? So you stack as many clients as you can, and then you live off of those renewals. But the problem that creates is now you have more clients than you can take care of. So if you've got, imagine all of your clients, want a quote, well, now you've got to quote all of these clients and you're backed up. So one thing that we definitely pride ourselves in is accessibility, being accessible, so that if you need something, we can try to get it back to you at least within 24 hours. So also finding, an insurance agent that's going to not just compare the rates, but is also going to show you, hey, I'm going to be here for you when you need me, and start looking at those skills with your agent as well.
Right, because I know with me, like, like being able to access you was key. Like, I have a question, I send you a text, right? I mean, getting that response definitely helps. I mean, I know I've been with other carriers where it did take a while to get back to me. So, I'll get you a quote, and then like a week later, it's like, okay, where's the quote? But I know with my experience with you, I give you a call, say, I'm looking at this property, I give you the address, and I mean, you usually have from at least my experience with you, you've got a good turnaround time. So I appreciate that.
Yeah, absolutely. And one thing I will say that I like doing is I really like working with investors. I like working with, homeowners, first-time home buyers, of course. But I really like working with investors because, for me personally, instead of managing, 15 clients who have 15 policies, I can manage, one Quito, for example, who has, multiple policies. So I do like that because it's efficient in my mind, so that I'm able to be there for my clients a lot more. Yeah.
Love that. So Taylor, what really makes right now like the worst time people are saying to be in insurance? Why is that?
Because of carrier guidelines. There's been a lot of changes to the insurance market as far as lots of claims happening across the U.S. So I don't know if you've got fires happening in California, you've got floods happening elsewhere. You've got hurricanes in Florida. You've got rioting going on, throughout the country. There's lots of theft going on. So all that adds up. So many people just think insurance companies have endless pockets, so they can just make claims, right? So they're just like, oh, okay, let's just make a claim, use our insurance for that. Whereas like maybe they would have paid for it out of pocket. So people are electing to make more claims right now, especially because people are hurting in the pockets a little bit more. So they're using their insurance. And as such, that puts insurance companies at risk of becoming insolvent. So every insurance company has to remain solvent, which basically means that they can pay out everybody if there was a claim, right? So that's what we're seeing is there's so many claims being made, so many losses being made in the market that insurance carriers are really having to tighten their belt. So they can make one adjustment to their guideline, and that can affect, their underwriting tremendously. So, for example, some carriers are saying we will no longer take monoline policies, which means it's just a homeowner's policy. They're saying we need a homeowner's policy and an auto policy in order to write with us. If you want to get our savings, we need to get all of your business. So there's certain guidelines like that. They're also really clamping down on, like T-lock shingles. Those are shingles that were manufactured in 2000. They stopped being manufactured in 2005, but they're reaching the end of their life cycle now. So anybody with T-lock shingles is going to have to get a new roof, or they won't get insurance. So there's things like that that are really making it hard as an insurance agent to place certain risks. There were some carriers last year that I could, depend on basically to place any type of home, whereas nowadays those same carriers, I can't rely on them to accept that risk. They're no longer accepting certain risks now. So it's making it difficult. There are certain areas across the US where I think insurance is becoming a luxury. For example, in Florida, you're paying $10,000 a year for your premium. So that's insane in my mind. If you're paying $10,000 a year just to have protection that you might never use, that's something to be talked about. I mean, there's going to need to be some insurance reform, in my opinion, probably in the next 5 to 10 years, because there's premium finance companies popping up now, so you can actually finance your premium for a year. So when we're getting into that stuff, then it's just it's nutty. So that's what I mean is it's kind of shocking to see how insurance is affecting people's everyday lives across the US nowadays. And those are a few examples. Yes.
So speaking of tip, how could someone, besides shopping rates, right? What could someone do to save on insurance, right?
Okay. So number one thing is maintenance around your house, and just making sure that everything is put together. Really, if the more, or I guess the less risk there is, the better the rate. Because really that's what it comes down to is preventing accidents, right? We don't want to have to use our insurance. It's there for if we need it, but we really don't want to have to use it. So just making sure that the house looks clean, there's no debris, there's no missing siding or anything like that. Everything is put together pretty well. That's going to be your number one way to get good rates. Another one is going to be smart devices. So a water sensor in the basement, sensors on the windows so that, it's like burglary, to prevent burglary. So things like that, those are going to get you some additional discounts. Another big one is going to be bundling. So if you have multiple policies, you can see anywhere from 15 to 20% discount with those. So those are a few ways.
Nice, because I've gotten my insurance canceled before because of broken windows, missing siding, right? But kind of talk to me about like the rehab type insurance where you're buying as me, I'm buying these broken down homes that need work, but at the same time I want to make sure that it's insured because if it catches on fire during the or whatever, during the rehab project or something happens that I'm, that I'm protected.
Yeah. Yeah. So really with something like that, it's it it really just depends on the house. I guess if you're buying a dilapidated house, finding the right carrier is going to be the most important part. Is making sure that you have a carrier that can assess the risk and write the risk, because a lot of times most carriers, they're going to want to have a house that's already put together because they understand the risks that come with renovating a house. So they're going to want to see a house that's already put together. So your carrier options are limited. I've got some carriers, thankfully, that will allow what's called a builder's risk policy to be added or endorsed onto your homeowner's policy or your dwelling policy. But really, it's just finding the right carrier that will allow you to make renovations, or course of construction, it's called. Yeah. So just finding the right carrier, you're going to want what's called builder's risk or course of construction.
All right.
Yeah.
Fantastic. So what do you find is like, where do you see yourself growing in insurance? Like, what's the overall goal for you in growing your business?
Well, the overall goal obviously is just to help more people. The more people that I can help, obviously the business will grow. But I really want to focus on, I think, investors, really helping in, that community thrive and find the best protection that they can get for their investments. And so in doing that, we'll probably need to hire here in the next couple of years, I'd say, just to help, because I'm just barely scratching the surface with investors right now. And I've kind of strategically made the decision to not take on so many new clients, just because I want to refine my process and make sure that the clients that I have right now are getting the best care that they deserve.
Great. Do you find that insurance agencies don't like investors? Or do they love investors?
Yeah, they don't. Insurance companies, and here's why. So, because most of the time they're getting like a temporary policy, right? They're buying a property, they're renovating it, and then they're flipping it. So sometimes policies will only stay active for maybe 6 months, sometimes less. Insurance companies want you to stay on. They want you to just sign on and then set it and forget it for 30 years, right? So that's where I think the frustration comes from. But I think that there's going to be a big shift in the perceived, I guess, opinion of investors with insurance, because really for a while there, investors were the only ones buying houses. So to me, it makes sense. Why not go with the people that are buying X amount of houses instead of trying to find the first time home buyer every single time? So I don't know. It's kind of a double-edged sword. I think that there is becoming more and more, or there's better options, that are coming out onto the market now, specifically targeting real estate investors. So it's happening. I mean, there's definitely something coming, that's changing the market, and it's because of you guys, honestly.
Because of guys like Quito buying 100 houses in a year.
Yeah, Quito. Yeah. Well, everybody has to start somewhere.
Right. Yeah. Well, awesome. Well, thank you for sharing your time and expertise, with us. And if someone want to get a hold of you, like, what's the best way for them to reach out?
Yeah, well, you could just call me. My phone number is 406-580-0365, or you can email me. That's going to be Taylor, that's Taylor, .Honaker, that's Honaker, at goosehead.com. And I'd be happy to help you. Just give me a call, shoot me an email, or you can go to trygoosehead.com. That's my website. You can actually just go on from there and get an instant quote from all 35 of my carriers. And then basically you just enter in your information. Then it'll spit out, kind of a shoot from the hip estimate from all my carriers. Then we can go in and fine tune it and get you some additional discounts. But those would be the best ways to get a hold of me.
All right. Well,
Great.
thank you. I know Taylor, you're someone that I use. So I really appreciate the service that you provide for me. Any last thoughts there, Jeremy?
Yeah, just give Taylor a call. He's super helpful. Seriously, we just as an example for his service, right? We have an indoor play business. People are really weary of insuring those things, and we've called multiple people before, people that like, hey, we can work on this, and no one's as helpful as Taylor. So Taylor's like actually getting this done, giving us a lot of options, and so you should really contact him and reach out to him for any of your insurance needs.
Awesome.
All
Thanks,
right.
Jeremy.
All right. But thank you for joining us in another episode. We'll see you next time.
Thanks, guys.